Hello traders, welcome back to my YouTube channel, and I hope you're doing fine. I hope you're doing great. So for those who have not subscribed to my YouTube channel, I would just ask you to subscribe to this YouTube channel. Okay, so it has been a long time since I posted my last video, and today I'm going to explain about draw on liquidity. So a lot of people have been asking about what exactly is a draw on liquidity. Okay, so we understand about what liquidity is, and for those who maybe doesn't understand about what liquidity is, I'll prepare a video to explain to them about liquidity. Okay, so before we actually understand what draw on liquidity is, you have to know that price is like a magnet, and it has been attracted or drawn to a certain price level. So for us when we understand where price is being drawn to, it helps us to give us a sign that we are actually expecting to see maybe price going up or price going up, depending on where that price level is. Okay, so and where exactly is price always attracted to? So price is always attracted to one of the two things. So it may either be an imbalance in terms of fair value gap, or it may be liquidity area, which is in terms of all the highs and all lows, the equal highs and equal lows. Okay, so when dealing with drawn liquidity, our attention should always be primarily focused on the current price leg that we are in. Okay, so in order to know where price is likely to be drawn to, we have to analyze it from daily time frame in order to know the direction bias. And then after that, when we have the understanding about where we actually expect to see the market moving to, we can actually switch to our time frames and find different kind of opportunities and different other areas where price will be drawn to. Okay, so that's the introduction about what exactly draw on liquidity is. Okay, so we'll go to the little charts and see how we can actually understand about the draw on liquidity. Okay, yeah, so here we are in the real charts, and I'm going to show you on how you can clearly understand where draw on liquidity is. So if you look at the present time where we are right now here, you can look at this area here, price is like here. So what are we actually expecting to see draw on liquidity? Where are we actually expecting to see a draw on liquidity? So as I said, price is always attracted to one of the two things, uh, the liquidity areas and the imbalance in terms of fair value gap. So if you look here, if you look closely here, you can actually see, like at the top here, you can actually see this is the high. So the high levels, like this area was the old high. Okay, this is the old high, and so we're actually expecting to see liquidity in this area. Okay, we're expecting to see price taking this level here and then reversing. Also, if you look on the left here, you can actually see like we have this imbalance here, what we call a fair value gap here. Okay, we have this fair value gap. Okay, so this is a fair value gap. So let me label it fair value gap. We have this fair value gap right there. Okay, so right now I'm actually expecting to see price moving to the upside. Okay, that's what I'm actually expecting. This is daily time frame. As I said, you have to analyze from daily time frame. Okay, so in daily time frame, I actually know now that my directional bias is bullish. Okay, I'm actually expecting to see price moving to the upside, taking this liquidity area here at the top, this all the highs, and also filling this imbalance, or what you call fair value gaps. Okay, so I'm actually expecting to see an institutional order flow entry during this area where we have our fair value gap here. Okay, so that's my directional bias. Now, as you know, in daily time frame, you have to understand the directional bias. Okay, we use daily time frame to understand where are we headed to our directional bias. Okay, so what I'm going to do now, I'm just going to go to lower time frame, which is 4 hour, and I'm actually going to look for opportunities. Okay, I'm going to look for opportunities. So let me try to use the size of these candles. Okay, so if you look closely, as you know, we are moving to the downside. We are creating the lower lows, lower highs, lower low, lower high, lower low, lower high. Okay, so now what I can actually see here, down here, I can actually see like we have this, what we actually call, let me remove this indicator for lower highs and lower lows. Okay, so if you look closely here, you can actually see like down here we are having what we call sell side liquidity. Okay, sell stops were resting down here, so the market has swept liquidity to the downside, and so we are actually expecting to see price reversing to the upside. Okay, this is what I'm actually expecting to see now, and you can actually see like now you see the market has caused what we call market structure shift here in 4 hour. Okay, we have this market structure shift. Okay, we have this market structure shift right there. Okay, market structure shift. So there we have market structure shift. Market structure shift, which is shift in market structure also. So you can actually see that we have shift in market structure. Okay, now we're actually expecting to see price moving down and then continue going up until it fills that fair value gap, where we can actually expect to see the market reversing and we can actually look for selling opportunities. But right now, what we're actually looking for, we're actually looking for buying opportunities, okay, until we reach to that fair value gap. Okay, so this is the sell side liquidity, okay, down here. So now I'm actually expecting to see price pushing to the upside. So let's go to 1 hour, try to look for clear fair value gap or an order block. Okay, okay. So if you look at this level here, which we can clearly see here, can clearly see this market structure shift. So we have market structure shift and we have this impulsive move to the upside. Okay, we have this movement to the upside. It's a very strong pressure. Okay, and actually see this strong passive move. Okay, which we actually call it institutional movement. Okay, so this is also what you can call a displacement. So this you can actually see displacement in this area. Okay, so what I'm actually going to do here, I'm going to look for an opportunity for buying opportunity. Okay, so let's see how price plays out. Okay, okay. So what you can clearly see from this, can actually see now that the price is moving to the downside. Okay, and we have this order block right here. Okay, why am I considering this order block? I'm considering this order block because of the presence of what we call a fair value gap at this area. Okay, so you can actually see you have this imbalance, fair value gap. Okay, a fair value gap right there. Fair value gap is like that. Okay, so fair value gap, and then I have this order block. And also if you look closely here, so we had a fair value gap, and that's why price decided to move down to fill this gap, and that's what we call drawn liquidity. Okay, so the market was moving down to fill this imbalance, okay, which is where we have a fair value gap, or what we call imbalance. And as I said in my explanation, that price is always attracted to any one of the two things, either an imbalance or a liquidity area. So if you look here, we had this fair value gap here, and price has come down now to fill this imbalance here in terms of the fair value gap here, and then you can actually move to the upside. But you can actually see we had this inducement here. Okay, you had this inducement, and you have to ask yourself, why was there an inducement here? It was trying to hunt the early buyers. Okay, why? Because if you look closely here, we have this, we have another fair value gap down here. Okay, below our order block, we have this fair value gap. Okay, which is also one of the reasons why price is moving to the downside. Okay, so as we said, price is always attracted to a certain level. Okay, where we can have to either to fair value gap where we have imbalance or in liquidity areas. Okay, so this was a what we call a retracement into in the filling of imbalances. Okay, it was the price was filling imbalances and was trying to what we call to draw some liquidities. Okay, for those people who were trying to buy as early buyers, the price was trying to take them out, okay, by filling this imbalance here. Okay, so that's why we say draw on liquidity. So you have to see liquidity if you want to trade safely. Okay, the reason why you can actually see this inducement here is because the price was trying to fill this fair value gap below. Okay, so now we can actually say like price is now ready to move to the upside. Okay, because I can actually see like every imbalance has been filled. Okay, so the market has filled imbalances and has taken some liquidities. Okay, some people who are early buyers have already been taken out of the market. Okay, so that's give us what you call a confidence for us to take this trade. Okay, so we are given a confidence to take this trade because every liquidity has been filled. Okay, so can actually enter the market right here and take a long position. Okay, so let's take this trade. Okay, can enter from here after we have actually anticipated and have seen this inducement there. Okay, so let me remove this order block area. Okay, so there we are. Okay, so there we can actually see that price. Okay, so you put your stop loss below that zone. Okay, and our TP has to be where we are actually expecting to see the market moving to, as I said, we expect to see price moving to the upside and filling the what we call the daily time frame, the imbalance in the daily time frame. Okay, so now I'm actually expecting to see price moving up to that area where we have the daily fair value gap. Okay, so now you can take this trade, you can take a long position here. So let's see what happens. Okay, yeah, and there we are. Okay, so you can actually see that now what we call liquidity, or what we can say like the market has filled, has hit our take profit. Okay, so you can actually see we have a 3.78 risk to reward ratio. Okay, so that's how nice it is to understand the drawn liquidity. So if you understand the drawn liquidity, you can actually trade safely and you can have the best entries. Okay, so for those who have liked this video, you can just click the like button, and for those who like to comment, you can comment. Okay, so thank you for your time and have a nice trading.